Hi, I'm Randy Pierson, Vice President of Life and Annuities for Gordon Marketing. And if you're an advisor out there and you want to expand your market, increase your average premium sizes, and most importantly, perhaps the kind of commissions that you're earning in this life insurance space, you're going to want to stay tuned on this video where we're going to be talking about leveraged bonus arrangements. All right, Ray, so leveraged bonus arrangements. I'm sure there's a lot of agents out there that are saying, what the heck is this all about? Leveraged bonus arrangements. First of all, let's make sure they understand what market or what kind of space are we talking about?
Yeah, well, in this case, we're diving into the small business owner market. And, these days, of course, we receive constant inquiries from some of our agent base of, hey, what kind of solutions are out there? And, a lot of solutions these days are around executive bonus and non-qualified deferred comp. And this is just a little bit of a similar concept, but with a little bit of a unique twist.
Right. It's important for agents to understand, in the highly compensated space, right? Employees and or business owners who are trying to take their large amount of income and shelter it from taxes in some instances, and certainly save as much as they can for retirement, it requires some unique, resourceful planning. Mm-hmm. So talk to us more about the details. What are those unique features of this leveraged bonus arrangement that make it really sellable for the typical producer?
Well, and generally speaking, business owners, they're always kind of in a quandary where, they want to make sure that their key employees, their key talent is going to stick around.
Absolutely.
Okay. And then the key talent that's the recipient of a program like this wants to make sure that this fringe benefit is going to be there for them in retirement. And we can absolutely accomplish that with a leveraged bonus arrangement. And really what I like about this concept is kind of the best of both worlds. It gives a business owner the opportunity to reward and attract and retain an employee, but also still control what happens within the policy, mm-hmm. and also get tax deductibility too. So that's kind of a best of both worlds scenario.
Yes, absolutely. Best of all worlds, really. I mean, so, whenever I hear anything about tax deductibility, when I was in personal production and I brought up something like that in front of a business owner, that's when their ears perked up and they said, tell me more. So can you expand on that a little bit? How does that work within this concept?
Yeah, absolutely. So with this, it's a Section 162 executive bonus plan. And like I said, with a twist. So again, it's a scenario where the employee, the key employee, is the owner and the insured of that policy, just like in a regular Section 162. Mm-hmm. Now, a lot of employers will double bonus that money into that account for the employee to, obviously pay for the insurance, but also to offset their income tax liability. Mm-hmm. But what we're saying here with the leveraged bonus is, hey, do that, but instead of double bonusing, loan to the employee the amount of money that they would need to pay their income tax on that. So that's, one way to approach it, but where you really tie that back to the business owner and give them that control is by collaterally assigning that business or that loan, mm-hmm. and collaterally assigning control of that cash value back to the business owner. So at the end of the day, what happens is the business owner can set up a loan arrangement and really even a vesting schedule for that.
Okay,
that
was
part of saying, hey, stay for this amount of time or stay until your retirement and we'll forgive this loan or a certain portion of it depending on how long this key employee stays. So that's where that control element that's so important to a business owner comes back to them, but they're still able to get that tax deduction too because it's still that Section 162 bonus plan. So, that's really the sizzle to that kind of plan. I think it would have a lot of attractiveness to a small business owner that has a handful of key talent that they want to make sure sticks around and feels very rewarded.
So that vesting schedule, right? Are there any limitations or constraints on the business owner with regards to the time period that they can create that vesting?
There's not really any limitations set by that. They have a choice as far as in interest rate. They can charge absolutely no interest on that loan. They can charge, maybe like the minimal, federally mandated rate out there too, and just set that up as well. But more often than not, they're going to try to set some vesting schedule up as it corresponds to the loan to the person and how long they would want them to stay around.
Okay.
Again, whether it's 10 years or till, hey, you're 65, whatever that, makes most sense between the employer and employee.
Absolutely. I think it's fairly obvious, but the advantages to a producer that wants to get into this space might be what?
Well, again, it's all about a return on your time invested with your clients. We talk often about working within the business owner space. This is one of those hot topics that business owners want to know about, and ultimately that's going to result in more sales opportunities. A concept like this is going to be more value added into a business owner's life, and it's really ultimately going to result in larger life insurance cases written.
Absolutely, yeah, absolutely. So, and certainly a couple other things real quickly. I know, when I was a young producer, I wanted to get into the business owner market because it was daytime activity. Referrals from business owners seem to be much more accessible than from kitchen table type sales. And of course, as you mentioned, larger premiums. But our time is running out here. So briefly, can you help an advisor who's watching this video and maybe we've piqued their interest in getting into the space? How might they get started?
Yeah, we sure can here. And regarding this specific concept, I actually have a white paper that describes this in full detail and even gives some real life case examples as well too. So if you're wanting to learn more, give me a jingle, shoot me an email, and I can get that information out to you. And then we can work on identifying some real opportunities to put this together and get some cases written for you.
This is definitely one of those areas where once you put your toe in the water and you've written one of these cases, you can really create an avalanche of opportunity. And so I would encourage any agent out there that's watching this video and we've piqued your interest, reach out to Ray at gordonmarketing.com for that white paper. Learn a little bit of the nuance that you need to know to initiate the conversations. And our team of experienced, talented marketers can assist you in the case design, the sales process, and the implementation to help you expand your market and grow your income. But with that, we've run out of time, Ray. I want to thank you for participating today and bringing such a valuable concept to the table. If you're watching this video and you liked it, please do me a favor and click subscribe at the bottom, as well as the notification bell. So every time we come out with new content, you'll be sure and be notified. But for that, we've got to call this episode of Selling Life and Annuities to an end. Happy selling!